I didn't know I was going to be here today and be talking with you or running, an 8-figure company. I always had dreams and aspirations to be successful and have a lot of wealth and help a lot of people. But after having the heart attack and losing my family, living on the street, losing our car, getting evicted, it was basically building blocks for me to take it to the next level. I started to exercise at night. I was 400 pounds at that time, and it was a slow progressional change to where I lost the weight, then my confidence boosted up. I dropped out of school in the 6th grade, so I had not been educated. Ever since then, I was too scared to go back to school. So after I lost the weight, it gave me the confidence to go back to school, to get my degree, learned about finance, real estate investing, studied the top people, Warren Buffett, Jeff Bezos, Anthony Robbins, spent my time in the library reading, studying successful people. How do they do it? What do they do? Studying the Forbes list. How do these people create this massive wealth from nothing?
Welcome to the Apartment Investing Journey, where we explore every facet of multifamily investing and development with top investors, brokers, and service providers who share their strategies, successes, and secrets to help you on your apartment investing journey.
Hey guys, David Robinson here with the Apartment Investing Journey. I'm excited for our guest today. Today on the show, I've got Angelo Christian. Angelo, welcome to the show.
Thank you, man, so much. I'm so excited to be on the show. Apartment investing, I love that, man. It's awesome.
Well, a little bit about Angelo. Angelo is an investor himself and an entrepreneur. Mm-hmm. He is the chairman and CEO of Christian Financial, a diversified investment holdings company. He's been featured in Bloomberg, CNN, Good Morning America, Great Day Houston, Houston Chronicle, and Business Insider. He resides in Houston, Texas, with his loving family, happily married, and a proud father of 3 children. Now, that's just a very, very brief overview, but I'm excited to get the whole story. So as I do with all my guests, Christian, if you don't mind, just back up and tell us your story.
Thank you, David, for having me on the show. I'm tickled and honored to be on here. I think it'll be a great outcome for all the followers for what we offer. But yeah, I mean, fast forward 17 years into the future, and you get to talk about all those accolades, but it wasn't always like that. I grew up from very humble beginnings, poor, broken, homeless on the streets of Houston, and I was morbidly obese. I had no future, didn't know what I was going to do. When I woke up every single day, it was all about what I was going to eat and what was on TV. No one in my family had ever graduated. No one had ever amassed a fortune. We grew up in poverty, living basically paycheck to paycheck. My father was an entrepreneur, but struggled very hard in the restaurant business. And so I loved my parents very much. It just, life was very tough. Growing up, we were constantly evicted out of homes, sleeping in cars, living in hotels for most of my life. I dropped out of school when I was in the 6th grade because I was beat up so bad and bullied because of my obesity. I was extremely introverted, scared of the world, didn't know what I was going to do, and hung out with the wrong crowd, turned to drugs. So yeah, it's a massive shift, man. I mean, from where I was, I had a heart attack when I was 18. So it's I guess if they would have given me an omen back then in high school, I was probably the most likely to die. Definitely not going to be on the dean's list or most likely to succeed. So for me to be here today and talk to you, I'll take it all day long.
Well, that is an interesting background. At what point in your life did things start to turn around for you? And when did you start to see some changes happening, or, at what moment, and what were the steps that you took to dig yourself out of this place you were in?
That's a great question, Dave. I'm thinking back and looking back, I think that, The Rock talks about this. I don't know if you follow The Rock, that much, but when somebody hits a rock bottom in their life and their back's against the wall, when I had the heart attack and we got our car repossessed and we lost our home all at once, I mean, you have no choice at that time. It's either you're going to get up and succeed, and I don't know if I can cuss on this thing, but you're going to get up and you're going to succeed and do whatever it takes, or you're just going to die. And, I was 18 years old, and as I stated before, living a life of disparity and not knowing what was going on and being like a zombie chasing mirage to losing everything, I had to quickly turn it around. And so me hitting that wall and crashing and being on the verge of dying, and then looking for something as a reference and subconsciously not knowing that the movie that changed my life was Rocky. watching the movie Rocky repeatedly, he was my mentor, my inspiration, my hero that gave me the hope that if Rocky could defeat Creed and become the champ, then Angelo Christian could also survive. And I think that it's testament that people, they need a mentor, they need a coach, they need someone to guide them. And I didn't have that. My father was absentee and my mother was a waitress at Olive Garden, and she was working 7 days a week trying to put food on the table. So the turning point was me hitting that wall and then turning to film the movie Rocky to give me the inspiration to turn it around.
Man, this is a great story. Now, I'm interested in the change and the transformation, and how do you go from where you're at today, a very successful mortgage broker, and having an impact on a lot of different people, from where you were as an 18-year-old having a heart attack? What does that transition look like for us, and how did that process work out for you?
Well, it's like what Steve Jobs talks about, that, you can't connect the dots looking forward. You don't really know what's going to happen. And, you have a goal, you have a plan, and I live by goals and I have plans. But where I'm at today, I didn't know I was going to be here today and be talking with you or running, an 8-figure company. I always had dreams and aspirations to be successful and have a lot of wealth and help a lot of people. But after having the heart attack and losing my family, living on the street, losing our car, getting evicted, it was basically, building blocks for me to take it to the next level. So watching the movie Rocky gave me the inspiration to exercise. I started to exercise at night. I was 400 pounds at that time, and it was a slow progressional change to where I lost the weight, then my confidence boosted up. And then I remember I dropped out of school in the 6th grade, so I had not been educated ever since then. I was too scared to go back to school. So after I lost the weight, it gave me the confidence to go back to school to get my degree. So went to school to Bauer College of Business for finance and economics, learned about finance, real estate investing, studied the top people, Warren Buffett, Jeff Bezos, Anthony Robbins. Spent my time in the library reading, studying successful people. How do they do it? What do they do? Studying the Forbes list. How do these people create this massive wealth from nothing? Carnegie, which I'm actually related in the bloodline to Andrew Carnegie. So that seems pretty interesting. But studying people and then modeling off of these successful entrepreneurs, like Warren Buffett is one of my heroes, even though I've never met the man. I've read all of his books. I watch all of his YouTube videos. And how does that person behave? What's their behavior? What do they do to get there? And then model that, right, as best as you can with your personality. And so, I have to say, because I didn't really have a good mentor or guide to lead me along the way, like a father figure, I use these people that were real, imaginary in my mind, like, Arnold Schwarzenegger, Sylvester Stallone, Jeff Bezos, Warren Buffett, to be my mentors, my parents, my guide to show me how to do it. So by immersing myself in their books, adopting their thinking as best as I could, with health, wealth, love, relationships, to transform my life, right? And that's kind of been the last, 15 years, has been doing that, right? Just studying people. How did they do it? How did Google hire their people, retain their people, and develop that program for employees and recruiting, and just learning that and then slowly building. And now, things are much more deliberate and more conscious and planned out because we actually have a track record. We have the revenues to sustain capital investments and different things. So, again, it's been a long battle, uphill battle. And what I always say, Dave, is that anything great that we want is uphill. You have to work your butt off to get it. There's no magic. It's coming in every single day and grinding it out. I still work, believe it or not, about 100 hours a week. I work every day. So just to make sure that we can deliver, to the bottom line.
Interesting. So tell us about your progression and your journey in business. Where did it start, and how did you get to the place you're at today?
Yeah. So, like I said, I went to school for finance and economics, and I got a job as a mortgage loan officer in 2005 for a very large mortgage bank at that time called AmeriQuest Mortgage Company. They specialize in subprime refinance, and that's all I did. I learned the business. It was a multi-billion-dollar company, actually owned by Roland Arnault, who's passed away now, and built a very successful franchise. It ended up crumbling in the recession, but it was a phenomenal model. I was really, really impressed with it. after that shut down, I went to go work for a mortgage broker in Houston. He was an attorney, very successful multimillionaire, and had a very successful mortgage brokerage in downtown Houston. And, learn the business. I'm very entrepreneurial. I always wanted to own my own company. So after I had saved up enough capital from the loan closings, I opened up my own brokerage in 2006 and, started to get into the residential mortgage side of the business, doing subprime. And when the recession hit, then we kind of migrated into FHA government lending and really focused heavy on government lending, reverse mortgage, FHA, VA, USDA, nationwide, primary residential lending, all the way through 2016. And really focus on scaling the business, getting the revenues, up into the 100 millions with that. And then in 2017, we started to dabble in a little bit of the private sector, private hard money and multifamily commercial. And that's a newer avenue for us. But the interesting thing is that side of the business excites me so much more. And our revenue growth is so much stronger on that side of the business than the primary residential, like doing multifamily deals. I mean, all kinds of commercial transactions, working on the private sector. The access to the capital markets, the agility to scale and to fund deals, make a decision from your desk is like none other without all the bureaucracy or red tape surrounding, residential mortgages. And so right now, we're operating on two different sectors, right? We have our primary residential side and then we have our private side. And that's been fascinating. It's been a great ride and we're growing that very fast and helping a lot of investors all over the country with getting capital, whether it's a fix and flip, a blanket mortgage, a hotel chain, a restaurant, a casino, a 200-unit apartment complex, whatever, and getting the funding to secure and take down that property is really, really cool and just a lot more exciting. So that's how we're operating the structure now today is we have our two divisions, the private hard money side and then our banking side.
Gotcha. And as far as the banking side is concerned, that's mainly focused on residential. Is that correct?
That's right. Yeah.
And so do any traditional banking or brokering on commercial deals or only private equity?
We do. I mean, we have bank terms as well. But, one of the things that I've always strived to do in business is, and above and beyond just giving great service, is being different. I'm trying to really focus on being different in the marketplace and obviously dominating, but everybody offers a, SBA loan with 10% down or a conventional multifamily with 25% down with a 5.25 rate. You can go get that anywhere. So what are you going to do to be different? I mean, yeah, you have a brand and people can go with you and we offer that program, but what can you do that's different? So a lot of people call us for being a private money funder because they don't want to deal with the red tape of a bank. I think a lot of banks right now are scared to make loans and they don't want that on their balance sheet. So if one thing doesn't fit the buy box, they deny the deal. And we usually get the call from the commercial banker that can't get the loan funded and they're pissed off because obviously they don't get their commission, but they believe in the deal. They believe it was a good deal. Like I see 100 loans a week all over the country from other lenders that they can't get them funded at their own bank for crazy reasons. I mean, I'll give you an example. We had a hotel here in Houston. It was worth $7 million. The loan was for $3 million, 40% loan to value. There was 4 partners on it. 3 of the guarantors had, 750 credit. One of them had a 630 credit. So the bank denied it because they didn't like the 630 FICO score. I mean, it's crazy. And this is a 40% loan to value. Debt service is like at 1.3. So it blows my mind that, they couldn't get funding and they're on a hard money loan paying 12% interest right now. We refinanced them and dropped them to 7.5%.
That's great. I think I have a little bit better picture of your business. I'm interested also in chatting with you briefly about your personal real estate investing. Obviously, you've built a very successful residential mortgage business. You're now starting to transition more into the private equity space and lending private money for commercial deals and multifamily deals. Tell us a little bit about, and that's great. You're doing a great job of building a fantastic business. And it also sounds like you have some experience in your own personal investing as well. Tell us a little bit about that.
Mm-hmm. Yeah, I mean, obviously, most of my wealth is tied up in the business because I believe that you have to invest in yourself first, invest in your mind, invest in your core business, whatever that is, your core competencies, like Warren Buffett talks about, and that's my business. I'm going to get the highest returns from my business. So that's really the main thing. And then outside of that, yes, I mean, I have some long-term holdings in the public market. Like we have shares like of Apple and Tesla and things like that. Those are great, and I'm really fond of that. But the returns that I'm going to get on that will never exceed what I can get with my own money and my own business. And then we have the other side of what I use with the capital is invested in multifamily. I'm big on multifamily investing, and my goal obviously is to have our multifamily income exceed our company revenue. I don't know if we're ever going to get there, but I'm going to try very hard to do that. So I'm always looking at deals personally through the company's money to add to the portfolio because, let's face it, we don't know what's going to happen in the future, whether there's a recession, a downturn. And I think that every company should be somewhat diversified in the event that something bad happens. We have another major collapse. So having multiple flows of income, I think is important also, but I think that you have to do it at the right time because I believe that the person that chases two rabbits catches none. And, Ray Dalio has a great quote. I don't know if you know what Ray Dalio is, but one of the most successful hedge fund managers of all time. And he says that you can have anything that you want, but you can't have everything. So some people, I see a lot of people, they try to dabble in a whole bunch of stuff and they have no mastery and therefore they have no liquidity or net worth that they've built up because they never became a master. Like having 10,000 in the stock market is not going to do anything for you. Having 100,000 in real estate is not going to really do anything for you. You need to have mega positions in something to really move that needle. And the only way you can do that is by generating a lot of income or with investors or wherever you can get that capital from to be able to, take down, like, for example, I mean, obviously buying a fourplex is great. It's good to learn about that and start that, but you're not going to retire off of a fourplex, right? You're going to need, 100. I mean, I don't depend on your goals. My goals are 10,000 doors. So that's going to take a lot of work to get to that point, right? But I think multifamily, to answer your question, is great. Anyone out there that's looking to do it, larger ones I think are really good. Obviously start small to learn. I mean, work with the right people and the right lenders. So
can you tell us a little bit about your personal experience? Obviously your goal is 10,000 doors, which is a phenomenal goal. Where are you at today on that path to 10,000 and how did you get started?
Yeah, I mean, being in the business, obviously we see a ton of deal flow, off-market stuff. So deals are coming across our desk all the time. So being exposed to it helps us to find the opportunities because, obviously, like you always hear, location. We don't really do deals in rural areas. So we're looking in, very urban, Orlando, San Diego, Austin, Raleigh, Charleston, stuff like that. Great locations is key. Right now, we have about 1,200 doors. We might, by the end of the year, have 1,500. And it all started just by making my first investment. I actually started with single family. So buying single family homes, foreclosures and short sales, and had a nasty lesson with that. And didn't really care so much for the single family. It was good to learn the business. And I was first starting in the real estate industry. I had 13 rental properties and basically lost them all. So it was a huge, it's always a humble beginning. Believe me, I lost them all. Didn't do it the right way. Didn't qualify the people for the tenants. They trashed the houses. One guy burned one of the houses down. I lost one property because I didn't set it up legally correctly. So, I've modulated over to the multifamily, and I think it's great. I love the idea of having a property manager run it and, trying to buy a larger complex in a great location and then letting the asset pay for itself, having the customer service the debt. I think it's a wonderful thing. It's a great strategy. And so how do you get started? I mean, there's a lot of, and I talk about that a lot on my podcast, how you can actually get started. There's so many different programs that we offer for investors to start their first deal. I mean, you're not going to get to 1,000 or 2,000 doors overnight. It takes many, many years. It takes an alliance of partners, right? I mean, I wasn't able to do this on my own. We have investors that are with the company that have their capital in this too. So it's meeting the right people, going to the events, the trade shows, meeting people, finding great relationships, partnering up, knowing the off market or the opportunity where the next deal is going to come. Everything is on LoopNet. So I mean, you have to be able to find stuff that other people can't, and develop those relationships, those connections to be able to find those opportunities. So I think that's one of the most important things.
So you're at 1,200 doors right now, which is no small feat. Tell us about a recent acquisition that you've had on those 1,200 doors.
Yeah, I don't know if you saw that on the posting that we sent up there yesterday. It was a 27 unit in Paris, Tennessee. It was interesting, and it's one of our strategies that we use here. One of the things that we kind of got famous for is we have a multifamily commercial mortgage with 100% financing, which is very unique because most banks or lenders want you to have skin in the game, but we use this as a bridge loan to be able to buy the property. So that property was listed at $1.6 million. So what we did is the seller was wanting to cash out and retire. We took a first mortgage for $600,000, and then the seller carried a second for the remainder of the mortgage, and we're able to buy that property with 100% loan to value. It's a hard money loan that we do, and I use it personally all the time. And it's a 40-year amortization. It's a 2-year balloon, but you can get 100% loan to value. We do the first mortgage at the bank, and then the seller carries a second mortgage. And then we go to basically take down the property. We close usually within 30 to 45 days. There's no credit or income qualification to the borrower. It's purely based off of the asset. It's equity-based lending at its finest. And we have to get an appraisal done, an MAI appraisal. That's we have to order that. But we close on the deal, we take it down, and then we refinance and we pay off the seller. Usually within a year, we move it over to a conventional loan at the bank. So that's a recent one that we just did that we closed on.
Man, that's interesting. And so is this your private equity fund that is funding this deal for you?
That's right. That's right.
Okay. Interesting. And as you've started to move into the multifamily space and working with more investors versus just the residential side, what would you say are the biggest challenges that investors are facing in the lending side of multifamily?
Yeah, that's a great question, actually. From what I've seen, it seems that seems like you have a lot of experience in this space too. There's been a huge migration to people wanting to be investors. And so I think you have a lot of people chasing the same deals and watching the same movie. And it's getting harder and harder to find a deal. I mean, you have these giant REITs out there, right, that are just gobbling up these apartment complexes and multifamily, or they're buying out other REITs. So I'm finding it harder and harder and harder to find great deals. And then what happens is it lowers your standard, your checkbox, what your expectations are, and finding a piece of real estate to invest in. And that can be dangerous because if you start lowering your standards or start settling, like I told you in the beginning, I don't buy properties that are in rural areas unless there's going to be a flip involved or something, if it's not for long-term holding. And so one of the challenges I find is, not being able to find a lot of great deals. So it's forcing ground up construction. And then the other thing is that I think that there's not a lot. I mean, your show is great. I think it educates people a lot, but I think that there's not a lot of education out there for the investors on what to do. I think it's a very tight-knit market, and where very few people succeed. And then there's a lot of people that want to get into the space. They don't have access to the capital. I mean, you're seeing these things now that are coming out like crowdfunding and different ways you can raise money. But I think access to the capital to be able to purchase these type of deals is very hard for new investors. So it leaves a lot of people on the sidelines.
Yeah. So as you have moved into this commercial lending space, multifamily space on the private equity side of things, what do you see as the greatest opportunity in working with someone like you versus working through the conventional lending institutions?
Well, like I always talk about, I mean, if you obviously, I think that the more relationships, like lending, credit is $1 trillion market, the more great lenders that you know, then it can make all the difference. Like I was at a trade show in Scottsdale a couple of weeks ago, and with other bankers that are just as big as me or even way, way bigger, and they're calling me to fund their loan out of my fund. Why are they calling me? Because I can do a program that offers 100% LTV so they can buy more deals. It's a very unique, niche product or we do a lot of investor cash flow refinance loans where you can do a no-doc loan, don't have to verify any income, pull the equity out of your property and buy more rental properties. We also do blanket mortgages where if somebody wants to bundle up all their REO, we can tie all their properties into one loan, blank them up and give them one loan. So having those unique product offerings, and I think that's a key to success, is having irresistible products where banks are very plain Jane vanilla and you put your 25% down. And there's nothing wrong with that. But there's a whole other side, I think, of investors that don't have access to that type of capital, or they need something that's a little bit more creative. Like, we do a lot of rehab loans where the properties are not stabilized. Banks don't really like to make loans on properties that are not stabilized. So like I was working on a $5 million deal today in Ohio, and it needs about $1 million in rehab. His bank's not going to touch that loan. That's why he's calling me, right? We're going to give him the money to inject back in to get it stabilized. He's at 35% occupancy right now. When he gets it stabilized, he's going to be at 92% occupancy. So we can look at that and say, okay, I'll make a loan on that to 70% loan to value. Where his bank's like, I don't even want it. Don't even bring that near. Don't even bring that into my office. So there's a whole side where maybe the person can't verify their credit. There's something wrong with the credit. Like we have no credit score requirements on our hard money products. So maybe the property's in bad condition, it's messed up, maybe it needs rehab money. So usually for the investors that they are trying to buy a property that maybe isn't in the best location, like we did a $15 million mall, it was foreclosed on at 40% loan to value. The bank didn't want to touch it because it was a foreclosure, but the borrower that was doing the deal was worth $200 million. And the bank, his own bank, denied him. It's a $200 million net worth, wouldn't touch the loan because it was a foreclosed mall and they didn't like the tenants. To me, if I look at that deal and I look at the asset, we're only lending to 40% loan to value, and the guy's worth $200 million. He's willing to be a PG, a personal guarantor on the loan. Hey, that's a pretty damn good deal to me. So I can make that decision. Say I want that loan, right? So I think that there's people out there, partnership. We do a lot of partner buyouts. Today I was working on a $20 million home in Beverly Hills. His funder backed out of the deal, and he needs $5 million more to finish the house. And they say he's too exposed. We're lending 35% loan to value. It's a house in the hills. I mean, I'll take it. So that real estate's not going to go away in Beverly Hills.
It's interesting. And so with all that you have going on, who's underwriting the deals for you? Or are you involved in that process?
Well, no, we have a whole team. I mean, I can't do it all. I mean, we have underwriters, processors, originators, managers, closers. I mean, we have many people it's just that
specifically
process,
on the hard money side?
Yeah, I'll do the initial deal. I'll set up the deal, on the bigger ones like that. I'm normally involved in the big ones. And then I have my team. After I make the deal with the client and we sign the LOI, then it goes into processing and underwriting, and it kind of goes from there. We get the appraisal, the title, all that stuff, clear the conditions. In that aspect, you go through a traditional process. Obviously, with hard money, it's 70% less steps than a conventional loan. But yeah, we still go through that process, the processing, underwriting, closing, that whole thing.
It seems like your specialty is focusing on these unique deals that have unique challenges that need to be overcome. I can imagine that that's a challenge to underwrite those unique deals because you don't have standard processes in place. And so help me to understand that process for you and how you guys navigate that.
Well, if we look at, like, for example, some of these loans that have a very large equity spread, like 50% loan to value, and we look at the borrower, we look at, the location, we can look at it and see if it makes sense or not based on these things. Obviously, every deal is different. I mean, right, I had a guy that came to me. He was trying to buy a $5 million hotel in Romania, and he wanted to pledge his house, his business. It was worth, $3 million. And then he owned an RV company, and he had 30 RVs that were free and clear. And he said each one was worth $150,000. I said, look, that may be the case, but I'm only giving you $50,000 for each one. I'm not going to give you full value for these RVs, and I'm only giving you 70% loan to value on your real estate. So the deal didn't work out because he needed $5 million. I could only give him $2 million. So obviously there's got to be protective equity in the deal for us. We have to make sure that if there's a fire sale and it goes into foreclosure, that we can quickly get out. So, like the mall was worth $22 million, and we made a first mortgage deed for $7 million. So even in a fire sale, we feel like we could get out of it. but if we're the point and fee structure that we're charging, if the first year will net out like 33%. So we like the deal. I mean, and that, the fact that the borrower has very strong financial. So I'll say that it's common sense underwriting. We're not going to force a deal just to make a deal. But to answer your question, it doesn't follow conventional banking guidelines. Oh, did he file his franchise tax? Did he put his corporate filing with this person? Did he complete his bylaws? I mean, that doesn't really matter to us. Let's look at this property. Where is it located? Can it debt service? Right? How strong are the tenants? Is it an A, B, C grade? What do we think about it? What's our exposure? And if we had to sell it in 30 days, what could we sell it for? And we won't, and that we usually won't go outside of that. All of our loans, these are not highly leveraged. So that's the difference, and you go back to the collapse. I mean, those are highly leveraged, 120% LTV, 100% LTV. I don't like those type of loans. And you see that a lot with government finance on the residential side, maximum loan to value exposure. It leaves our agencies on the hook if anything happens, right? So here, most of these loans I'm telling you about, they're 50% loan to value. So you have a very good, protective equity for the investor.
Well, Angelo, you've been gracious with your time. I know you're busy, and I want to start winding down here a little bit.
Yep.
This has been a very interesting conversation with me, a little bit different than virtually all the guests that I've had on the show thus far, but it's been very interesting, and I've enjoyed our conversation. In fact, you've given me a lot to think about. But I've got 3 sort of knee-jerk gut reaction questions for you. Ready?
Okay. Yep.
What's the biggest mistake you've made in your real estate investing journey so far that we could learn from?
Yes, that's a great question. And I'll say this, and I'll back our president: trust but verify. Be careful who you bring on your team. Be very careful about that. Always look over the shoulder. I think that's a key rule in business. When I was very busy scaling the company, I pretty much let anybody in to work with me. And I got burned very bad, and partners, employees stole millions of dollars from me on the company. So be very careful of who you associate with.
And if you were to give us one tip to help you be more careful with the people you let into your team, what would it be?
For example, you have to really get to know somebody over a period of time. Don't be in a rush to fill a position or to get a partner. And just because of deal heat, they call it deal heat, and you're focused on the deal and not who's the character or the integrity of the person. Before we hire anybody at our company now, it's a several month interview process. They come back 5-6 times, shadow trainings, testing. I've been interviewing one of the lenders right now for about 4 months because I want to see how he's going to act. I have him, come here and do this with me. Come check this out. Come look at this thing. Just see, hey, how does he respond? How fast does he respond to a text message? Does it take him a day, 2 days, 2 minutes? How long does it take him to return a phone call? Because that's how you're going to really tell how he's going to be with your clients, right? So don't be in a rush to make a decision, and because it could cost you dearly.
Great. What's the biggest win you've had on your real estate investing journey so far?
So we closed in Boca Raton. It was 192 unit. And then it was actually interesting. We closed on that it was about $13.8 million. And then someone came in like 6 months later and offered us $20 million for it. So it doesn't happen, at least in my lifetime, that I know of that often. So to give that money to the investors, the shareholders that were involved in that deal, was phenomenal. I don't know how many more times that's going to happen while I'm here, but
that's the deal we should have talked about. That's definitely a win. That's for sure.
Yeah. They don't always go down like that. I mean, I tell you. So yeah. It was a huge one.
Yeah, that's great. And then lastly, what's the best advice you have for someone who's just starting their apartment investing journey?
Well, like I mentioned in the beginning, that I think that you have to have a guide, a mentor, such a show as yours, guiding somebody about how do I set this structure up? What's the first thing I have to do? Somebody that can basically show you a straight line on how to become successful in this industry, in this space, because there's so many things that could go wrong that can and will. And having a very systematic process as a mentor, like I always talk about, LeBron James has a coach. If he needs a coach, we need a coach. You need somebody to show you, hey, don't do this, do that, follow these steps and you're going to be successful. So I think mentorship, finding the right person, whoever the top person is in that space, whoever it is, cling on to them, their material, learn it, immerse yourself in it, become a master, become obsessed, and then go for 1,000%. Learn from the masters.
Well, Angelo, thank you very much for taking some time coming on, telling your story. Your story is incredible from where you've come and the upbringing that you had and the challenges that you faced and being able to fight through that and build a very successful lending business. And if people want to get in touch with you, learn more about your businesses, whether it be on the residential side, whether it be on the hard money side, how can they get in touch with you and learn more about what you got going on?
Absolutely. So they can call us at the office. The number is 832-431-6331. We're open 7 days a week from 7 a.m. to 11 p.m. every single day. That's another thing, is that we have great hours. So you can call us. It doesn't matter if you want to do a deal Saturday, Sunday, Friday, 832-431-6331. Or you can check me out on the web at officialangelochristian.com. Again, that's officialangelochristian.com. Or obviously check us out on our YouTube. We have a pretty good following on YouTube. Go to my channel and just type in Angelo Christian. It'll come up on our YouTube channel.
Awesome. Well, Angelo, thank you for your time today. Thanks for sharing your story, and look forward to connecting with you again soon.
Absolutely. Thank you so much, Dave. Take care.
Hey guys, thanks for listening in today. Hope you enjoyed the episode. Please hit that subscribe button or leave us a quick review. Also, don't hesitate to reach out to us on Instagram, Facebook, or at apartmentinvestingjourney.com. See you next week.